screen. So for the people who are new, or you have just attended the first session, um, this is how you are going to, or this is what you are going to do. Just go to our YouTube channel, the Forex Crypto Hub, and then you go to videos. Then the first video you're going to watch is it the first video you will go and watch is this one. Is it common mistakes? Where is it? Scams, sorry, the common scams. So this is the first video you will watch: common forex scams and beginners guide to forex trading. That is the first video you need to watch. The second one is the one with the advantages of trading forex and why you should start trading. So basically it's about advantages of forex trading. The third one is forex trading, the disadvantages, what you need for you to become a trader, and also what is traded in this forex market. Then the other video, which is for sessions, sorry, the other one is the best time for you to trade, or what we call the trading sessions. And then the last one is when not to trade. When are you not supposed to trade? Now today we are going to do something different. So for today we are going to look on something we call market orders. Market orders. So to start with, you need to first ask yourself, what is an order? What is an order? An order is like giving instructions. So now, since we are dealing with the markets here, is now giving instructions to the broker to either do what? Buy or sell for you. Or you can basically say you are giving a command, a buy command or a sell command. That is what an order basically is. And we have types of market orders. We have types of market orders. The first one you can see on my screen is instant executions. Instant executions, that is the first type of an order. The second one is what we call pending orders. Pending orders. Then the fourth one is a stop loss order. Stop loss order. And then the last one is a take profit order. So let's check each and every one of them. Let's check each and every one of them. I believe I'm audible enough. I believe I'm audible enough. I believe I'm audible enough. So let's continue. The first one, which I've said, is instant execution. Instant execution, this is an order you placed at the current market price. Let's say you just come to the charts, you come to the charts and see, like, just check, like, looking on the current market. Let's say you have seen gold is going to sell, and you decide, I'm going to enter this trade because um, it has met my criteria for entry. So, and you say, I'm going to enter a sell, and you just come and execute at the current market price, that is now at 3229.24. You just enter a sell order. That is now what I mean by instant execution. You enter it immediately at the current market price after you have made your decision. Am I going to buy or am I going to sell? um, we will do the practicals later. First, let's first check on the theory, then we are going to do the practical part of it. uh, so the second type of an order is now what we call the pending orders. And pending orders, these are now orders that we place in advance with the belief that future prices will react at certain prices or levels. So, pending orders, as the name suggests, they are orders which are placed and awaits for the market now to come to those levels. And coming to pending orders, you have two types of pending orders. The first one we call it limit orders, and the second one is what we call the stop orders, right? Now, under limit orders, remember in the forex market we are either buying or selling. So the first order is what we call the buy limit. Buy limit. Now, what is this buy limit? Buy limit, this is an order placed with a broker to buy a certain amount at a given price or better. So once you check on the market and see that the market will be buying after hitting a particular point, you just go and place your buy or buy limit order. Buy limit order. So that when the market comes to that price or level, is now going to execute your order. Placing an order, we use the term execution. You can use the term place. You know, yeah, there are very many terms you can use in that. The next point on that is that the order is placed below the price when you believe the market will come down to a level and then reverse higher, right? And then what you should know is that it is placed while the market is doing what? While the market is selling. Like you can see the example I've given here. The red candlestick you can see is a sell candlestick. So, and below there is where I've seen the market will come to this point and now start buying. So you can see where the buy limit order is placed. Is placed below the current market. Now, if we can just come to the charts, if we can come to the charts, that is now the current market. We see that the gold, this is gold. Currently, gold prices are here, and see that the market will sell to maybe where we have this horizontal black line, and then once the market comes to this point, it will now be buying. So what I'll do, I'll come now where I have this line and read the prices. That will be now at 32.23. Now, in my broker side, I will go and place what now we are calling a buy limit order at this point. I believe now you have seen that where I've placed the order is below where the market is. Currently, this is where we have the market. Currently, this is where the market is. This is where the market is. And now, where I've placed my order is where we have this black line there. So I hope now you can understand that buy limit order well. Anybody who has not understood what a buy limit order is? Anyone? Alright, so silence means that you have understood that. So let's continue. Let's continue. Now we are going to what we call the sell limit order. Sell limit order. And a sell limit order, this is an order placed with a broker to sell at a given price or better. This order is placed above the current market price when you believe that market will come to a certain level and then do what? And then reverse higher, right? Sell limit order is placed when the market is what? Is buying. Is placed when the market is in a buy. So now let's come and check it here. Right, I still use what we have. So now let's say let's say now you have seen that this is gold, and you have seen the market will just go up. It will now not come down, but you have seen the market will go up. From the current market, you see that maybe the market will go up to this level here, and then after hitting that level, it will now start doing what? It is now going to start selling. So at this point where you have seen the market will go up to, that is now where we are going to place our sell limit order. So that once the market touches that point, our order will be activated, and if the market comes down, we will say it has respected our analysis and we will be making profits. But if the market surpasses now our order and continue going up, we are going to be in losses, right? We can say that now the market has violated our setup and we are going to be in losses. Have you understood now or how where you place a sell limit order? You place a sell limit order above the current market price. The current market is here. You place the order above it, but you need to have done analysis so that you can know what are the best or what are the reasons for me to sell at this level, right? Then for the buy limit order, you have seen that the order is placed below the current market, and you need to have done analysis as well. So now let's move to now the other type of pending orders, what we call now the stop orders. Stop orders. And under buy stop under stop orders, we are going to start with the first one, which is now the buy stop. Buy stop. What is a buy stop? Buy stop, this is an order placed with a broker to buy a certain amount when price surpasses a particular point. The order is placed above the market if you believe the market will continue to rise or go up. The order is placed when the market is buying. So now I think you have understood something that for pending orders, they are placed against the market direction. If the market is selling, what you will place is a buy limit. If the market is buying, what you will place now is a sell limit. But now for the stop orders, they go in the same market direction. So if the market is buying, what you are going to place in the market there is what we call what? A buy stop. A buy stop. Like for now, this is now where we have the current market, and we have seen the market will buy all the way to this level. We have not got an entry. So what we will do, we will come to a point like this one over here, and now place our what? And now place our buy stop at this level, so that once the market reaches this point, it's going to activate our order, and now if it continues to go up, we will be making profits. And if maybe it activates our order and goes against the direction we anticipate, then if we are not making profits, definitely we are going to be making losses. I believe now you have understood how a buy limit order is. It is placed in alignment or in the same market direction. Sorry, it is placed in the direction of the market, but above the current what? Above the current market. Let's say the market is currently at 3229.34. You can't place a buy stop at the current market. Maybe you place it at somewhere like 3230 or 3231. Yeah, you place it above. Then now, let's check on what a sell stop order is. A sell stop order is now the opposite of what? A buy stop. Buy stop. And a sell stop order is now, this is an order placed with a broker to sell a certain amount when prices surpasses a particular point or level or prices. The order is placed below the current market price at a point where you believe the market will continue to fall or continue to sell. The order is placed when the market is selling, right? When the market is selling, that's now when you place the order. Like in this case, you can see, but let's just go to the live chart and have a look on that. Now, I'm explaining now what we are calling the sell stop order. Now, like currently, this is now where we have the gold market price. We have the market price there, and we believe that the market of gold will be selling. So I'll come to maybe here or here or here. As long as the point is below the current market, I can place a sell stop or order. So that once the market reaches that point, is now going to activate my order, and if it continues to drop, I will be in good profits. If it activates and goes the other way around, I'll be making losses. But the most important thing here is for you to understand where you place the order. If it's a sell stop, it's below the current market when you believe the market will continue doing what? Continue selling. If it's a buy stop, if it's a buy stop, you place it above the market when you believe the market will continue going up, right? Yeah. Like, let's say you got your buy entry here, you got your first buy entry at this level, and you had seen the market will come up to this level. So you could have come to somewhere like here and placed what? A buy stop, so that when the market reaches to this point, you will activate your order, and from there all the way up to here, you will have made those profits for the buys. I believe, guys, you have understood now those types of orders. Let's go to the third type of an order, which is now the stop loss order, or the SL. SL is the stop loss. The initials for stop loss is SL. This is an order that is connected to a trade to prevent further losses if the price moves beyond a level that you specified. This is the most important order in forex trading, since it gives you the ability to control your risk and limit what? Limit your losses. So once you enter a trade, you have to do something we call the risk management. You have to do your calculations. Let's say you have an account that is worth $100. Once you enter a trade, that does not mean you are going to risk the whole $100. No, you just risk part of it, and you are the one to make a decision. You can say, I have an account of $100. I'm going to risk only $3 per trade, or $10 per trade, or $5 per trade. You are the one to decide, right? So now, where now you say, like in this case, you can see the part where the green has begun. That is now the part I'm intending to enter the market, right? Then from now where the red begins up to where it ends, that is now the stop loss. So this is now where we say is a stop loss, right? So in this case, if I was to take this trade and have this as my stop loss, if the trade goes against me, I will be willing to lose 36 what? $36 in this case, right? Stop loss is now, after you have done calculations, the amount you are willing to lose if the market is going to be against you. As we continue doing more and more practice, you will now understand these orders better. Then let's check on the last one before we embark in now to the practical part of it. The last one is what we call now the take profit order, and this is an order that specifies the exact price at which to close out an open position for profits. So now you have entered a trade, and you need, maybe you say I'm targeting something like $100. So you calculate and see where will $100 be. The green part now is the profit point. Like in this case, the whole green part is now the profit. So the last point, or the last price, which is now here, this is now where I will put my take profit. That will be at 30.91, and that, if the market was to go that way, I could have gained $154 in that sell, right? And so I was willing to lose $36 for me to gain $154. So that is now the profit and the loss. Let me just indicate for you where we have the. So the last part here is now where we will place our stop loss, and below here is now where we will have placed our take profit order. So this is now in case of a sell scenario. Now, in case you are in a buy scenario, it's going to happen the opposite. Okay, let me make this clear. If you are entering a sell, or if you are taking a sell trade, stop loss is always above your entry. Entry is where you have entered the market. You have placed a sell trade. So your stop loss should always be above that point. Your stop loss should always be above where you have entered your market. if you are entering a sell trade. And take profit should always be below. And the take profit should always be below. Now, if you are taking a buy trade, the opposite will happen. So if you are going to take a buy, let's say in this case, we have seen the market will be going up. So what we will do, let's say we have seen the market will be going up to this level here. We will now come and place our buy stop at 3250. We place our buy stop at 3250, right? And then we will see where can we place our stop loss. We place our stop loss at 3220. So if you are entering a buy, the stop loss should always be below your entry, and take profit should always be above your entry. So if we enter the market at 3250, we have our take profit at 3386. Just check on that. 3386 is above 3250. That is, so the take profit is above, the stop loss is below. I believe you have gotten those points clearly, right? I believe those points are clear. Now, what we'll be doing now, we will be going to check on how you can now use the MetaTrader, or now how you can place these orders. And before that, I have an NB here. All orders remain effective or in effect until the position is liquidated. Say a position is liquidated, is either the market has gone for your take profit or for your stop loss. So if you had your stop loss, let's say at 3220, then the market comes to 3220. That means now your order is liquidated. That is now when the order will be not be active. That is when now the order will not be active. Again, the order will remain ineffective until you modify it or change the levels. So let's say you had placed your stop loss at 3220 and you decide, maybe let me move this order from 3220 to 3222 or 3218. That is now the modification I'm talking about. Or you delete it or cancel it. Canceling it is now deleting it completely, so that if you are in a buy trade, that buy trade does not have what? A stop loss or a take profit. It's just only buys which are seen there. I believe you have gotten something from what you have shared today. Now, before we go to the next thing, the other day I told you to install MetaTrader 5 apps in your mobile phones, and also I shared a link for you to register an account with a broker. So if you did not do that right after the session, kindly do that so that we can be moving together. Now, what you will do, if you have not yet registered the account with the broker, after the session I'll be sharing the link to the broker. What you will do, you just go and register. You fill in your details there, everything. The account you are going to create there, the first account you will see appearing there will be a live account. So the live account is what we call real. So this is now the broker, we call it Just Markets. This is the broker I use mostly. Yeah. So now you will go register here. I'll provide that link for those who will be watching in YouTube. In the description I'll be providing the link there. You create an account. Once you are done creating the account, now the account you will have created is a real account. I need you now to click on open new account. The dashboard on the mobile phones is different from the one you can see on my laptop screen. So you will click on open new account, then you click on try demo. You click on try demo, and then under the try demo, under what now is the try demo, you open what? You open a standard, the standard account. This is the one I would like you to open. one, you can see minimum first deposit is $10 for the standard. For the pro, the minimum deposit is $200. For the Ross price as well, the minimum deposit is 200. So there's a reason. You can see now the difference and why I've said you open the standard account. So you click on try demo. For the currency, you indicate the currency you would like to be using. Is it the euro? Is it the pound? The Kuwait? KWD is Kuwait, ZAR, this is South African rand, this is GBP, the Great Britain pound, euro, and then the dollar. So you just choose the one you would like to use. For the leverage, you can see the leverages are here. In the next session, we are going to talk about leverage for you to understand what leverage is, but you can just have it at, as 1:3000, no problem. Then you now enter a password. The password you are going to enter here, it must have one capital letters, small letters, numbers, and the special case numbers like things like hashtag, star. um I believe you add. I believe you understand those. So then for the balance, you come and indicate the balance you need here. So I'll now proceed and click on what? Create account. So now I will have created my demo account. Let's just wait for it to complete loading. You can see the account is done. What? The account has been created successfully. So this is the account. Now the next will be now having this account now in your MetaTraders. So what you'll do, you copy this one, the hashtag, from the hashtag 2000 or 200, it will depend with the one you will be provided with. From where you have that hashtag, you copy it, you just copy it. That we call it account ID or login ID. So you copy it, or account number, whichever name you're going to call it. You copy it and then you proceed to what? You proceed to your MetaTraders. So let me grab what? Let me do this. Let me get let me join with the phone here so that we can proceed and show you now about the MetaTrader and how to place the orders. So far, is there anyone with a question? Anyone with a question so far? Any question? Any questions so far? Okay, so if no question, then we can check on that. Excuse me for a minute. Alright, sorry about that. Let's continue. Alright, so now I'll proceed to something different. So I have to stop sharing this one. I stop sharing that one and share. So now so I'll add to the MetaTrader. That is now MetaTrader 5. I'll add straight to MetaTrader 5. So this is now MetaTrader 5. So in your MetaTrader 5, this is how it's going to look like up there. So you click on the plus, once you click there, find the broker, just type just markets, you type the name there, just markets. Then once you are done, you click on the just markets global. That is the one you are going to be using. You click on it, then on the login you come and paste the account ID you would have already copied. So for me, I'm just going to enter it manually. 1190 683. For the password, you enter the password you have entered there. Then on the server, you click on demo. It's a demo account. This one is for practice, so it's a demo account. This one is a demo account. So just a minute, I enter my password and then continue with sharing the screen. I enter the password, then continue sharing the screen. Just a minute. Uh-huh, 200 1190 683. Sometimes it might take you some minutes before the demo, or any account, whether live or demo. So once if you see it taking time, just be patient. It's going to load. Maybe it might be network or the servers are too busy. So if you see it doing so, just be patient with it. It's going to work out. Yeah, you just be patient and then it's going to connect. Be patient with it. Alright, let's continue. It's connected now. Let me share. Let me come back and share so that we can continue. It's now connected. So now once it's connected, you are going to see your accounts over there. So you just click on that account, the first one. You click on it first. Then once you have clicked on it, just click somewhere here below. You can click on trade or anything else there. And once you have clicked on it, you can now see your balance is there. You click on trade, you're going to see your account balance. Yeah. So now this is now how the MetaTrader looks like. When you click on quotes, you are going to see now the currency pairs. You click on quotes, you're going to see the currency pairs. Now, how can you add or remove these currency pairs from now this front page of your MetaTrader, or how can you remain with the pairs you need to trade? So if you want to remove them, you click on the top right corner there. You click on the top right corner, then you are going to see that delete icon. Click on it. and then you can mark the ones you want to delete. If it's all of them, just click there, of which they are not going to delete all. One will be remaining there, which is not a problem. So you can see the rest have now disappeared. I'm remaining with only one. Now I want to add the ones I'll need. I click on the plus sign. You can see the things we talked about, what you can trade in Forex, they are all here. You can see we have crypto, um, we have the shares, we have all these indices, metals, oil, you know, they are all here. So now, if maybe you don't know which pair you need for you to trade, you can come to something like the Forex M. Forex M, you're going to see the currencies here, they are all here. But now, if you know the pair, you just type its name. Let's say it's Euro USD. I just click there, I just type the name, then I click on the plus that is on the, I click on that. Once I go back, I'll get the pair there. Let's check another one, GBP USD. Click on it again. For gold is being abbreviated as XAU USD, so I'll as well click on it there. And now you can see the pairs I've added, they are all here in my home page or my front page. Now if you check at each and every pair, you're going to see that we have some percentages there. That's just let's take an example of the Euro USD. Above the USD, you are going to you can see we have 0.63%. So this one shows now the percentage change. The market has gone up since it started buying today, right? So from where the market started buying today, which is here, from here now to where the market is currently at is now the 0.62% to here. That is now the 0.62%, right? If it's for something like GBP USD, you can see it's 0.55. For gold is 1.02. So that means if you are in that trade and you ended during that time, this now in terms of percentage, this is the percentage you would have made in terms of returns. Okay, now you can see there below the currency pairs, you can see we have some numbers changing there. Like let's check on GBP USD. Below the M, there you can see we have 11, it's changing to 10, 9, you know. Just check on that, you can see those numbers keep changing. So what are these? These ones is what we call the spreads. Spreads, this is the difference between the buy and the sell price. This is the difference between the buy and the sell price. So if I'm to execute a trade now on the GBP USD, let's say I place on a buy, I just click on buy. The trade is going to begin with a negative, which is equivalent to the spreads. It's at negative 0.09. So coming to this and check on the spreads, you can see the spreads will be the ones now, once you enter a trade, it begins with a negative because of the spreads. I hope you can understand that. Now, if you click on any pair, this is now what you're going to see. You have new order, chart, properties, market statistics, then symbol view. Let's start with symbol view. If you click on symbol view, you can see we have a change on the appearance, right? So if you want to take it back, you just click on any pair, then go to advanced view. And in my view, advanced view is the best form of the chart appearance, right? So that is it on that. Then we have things to do with I don't know, market statistics. This will show you where the market the highest, the lowest has gone, but I normally don't have much I normally don't look on that. We have properties as well. There's a lot of information over here, but also I don't check on that. So now on that section, the other part is chart. Each and every pair has its own chart. Now this is now the candlesticks, the things you can see here, we call them candlesticks. We will learn more about them once we start the technical analysis part. Each and every pair has its own chart. You can see the one I had initially is different from this one. So if I go to gold, you are going to see its chart is as well different. So you can see each and every pair has a different what? Has a different chart. Has a different chart. Then the other one is now about the new order. So if I click on new order, this is what I'll see. You will see on the left side, you can see below there is a sell. So above there, the prices you are going to see there is now the sell price. 32.33.17 is the sell price. And then 32.33.29 is the buy price. If you're going to sell, this is the price you will sell with. If you're going to buy, this is the price which is going to indicate as your entry level for that trade. Again, above there or below the market execution, you can see we have something there. So this is now what we call the lot size. The lot size is in our next subtopic, which is now the last subtopic before we finish the basics. So you can change it to whichever you want. But for beginners like you, 0.01 is the best. The best lot size you can use as you start practicing. So now, what you can, if now we have learned about the market orders. Now we learned that the first order is what we call an instant execution. So if I've just come to gold and I've seen gold is going to sell, I just click on XAU USD. So this is what I'll do. I click on XAU. I've already done the analysis. So I come click on XAU USD, then click on new order. Once I click on new order, I just click on sell. That is now what we call an instant execution. I have entered the trade right away, just immediately, or at the current market price. And you can see this is how it is. So when you have entered trades and they are in losses, they indicate those red numbers which are negatives. Now here, yeah, since I'm done with the part for the quotes for now, there's still more to check on that area in the order side. That is now, you can see we have a market execution. When you click on market execution, this is now where the pending orders are. We have buy limit, sell limit, buy stop, sell stop. Those are the commonly used orders. The last two orders I've never used them actually, and I even don't know what they are for. So we focus on the first four orders. We will check on that. Even if it's not now, tomorrow we can check on that, or I can do a short video showing you how to place those orders. Now let's go back. Now once you click on trade, let's just watch on this. You can see the if it's right now, like for gold, it has turned to profit. So when your trades are in profit, they'll turn to blue. If it's loss, they'll turn to red. And now you can see we have our balance. Let's start. Balance is now the current, sorry, the initial starting amount in your account is now the balance. Then what is equity? Equity is now your balance minus, like in this case, our trades all when you do the total calculation, we are at a loss of negative 0.08. It's indicated on the top left. That is the total loss for the two orders we have. So our equity is going to be now the account balance minus our losses. But if we are into profits, it's going to be our balance plus, it's going to be a balance plus what we have, right? What are like right now it's at negative 0.75. That means if I'm going to close this both these orders, we are going to end up losing that amount of $0.75, right? Anything else there about margin? Free margin, I'll explain that when we are doing the session. I'll explain that while doing the session on that, so we'll see about that. Now the other thing you can see here, we have history. Now you can be able to access the whole data for you. Even if you started trading back in 2000, you can access that data. You can click if it's today. You can see today what we have done. We have made a deposit. Remember, this is a demo account. We are doing a demonstration. So what we did here, we have done a deposit. You can see there. So if I'm to close these trades, they are going to appear under today's history. If you want to check what you did from last week, you can just click on last week, last month, last 3 months, and then under custom period, now you can come and fill whichever year maybe you want to check, which year you want to check on. You can come and check if it's maybe the 2019, whatever year, you can come and indicate there, and the month. Let's say it's something like from which year, let's say 2000 and what, 2012. Let's say you began trading that time and it was on May. You just click on that, and now go all the way to let's not go far. If you want to come up to 2025, it's okay, but let's end it at 2013 October. I just click now on 30th of it. I click on OK. So you can see the history is empty, no history there, right? So under history, you're going to see all the history for the trades you have taken, the losses you have taken, the profits you have taken. Everything is going to be documented under the history section. Now we have messages. Messages, sometimes you get some news pop up here, or maybe some brokers will send you some short messages there, you know. Yeah, but they are not that much important, so I just wanted you to know what it's all about. For the charts, once you click on the charts, it's just to show you the chart of a specific pair. There's nothing much. And charts. Now, how can you close a trade? Let's say like we have, you can see now once our trades have turned to profits, you can see everything is becoming blue. Let's say we want to close the trade on what? On the first one, that is GBP USD. So what we do, you swipe left. You just go where you have your trade, the one you want to close, and then swipe left, and then click on the first icon there. You click on the first one. You can see it showing us close with a loss. If it's a trade we are in profit, it's going to show you close with a profit, the one which is reading in your account. Then maybe let's say you have so many accounts and you want to close all of them at once. Just right above the first order, you can see we have 3 dots. So you click on the 3 dots and then you click on what? Accept these terms and conditions, then okay. Once we have done that, come back and now click. You want to close or what? Close all positions or close losing positions. The decision is going to be yours in this case. So that is now for how you can close your trades. Now when we come to the charts, let me use one which is clean. When you come to the charts, what you are going to see, we are going to have prices against time. This is where we have our prices. This is now where we have our prices. This is where we have our prices. You can see the 1.23 or those are prices. And then below here, we have time. You can see like it's 19th May. The time there is something like 5 p.m. So this is the time. At this time, the market was at that particular price. Yeah, we have time here, right? So that is now how the chart looks. And in the charts, you can see we have things which are green and others are red. The green ones, all of it or all of them, we call them candlesticks. candlestick. Candlesticks. If it's one is a candlestick. Now, the green ones, they are for buy, or we say they are bullish candlesticks. The red one are bearish or for sales, right? Now, above there, you can see we have some things up there. Let's start with the first one, which looks like a cross. This one, we use it to read prices which are in between. You can see we have some prices which we can't just read manually, so we use these ones to read the prices there. So once you have selected the tool and you want it to disappear from your screen, you just go and click on it again. It's going now to disappear. Then we have the other one, which is which resembles the dollar sign. We have the other one which resembles the dollar sign. For this one, it's for indicators. So let's add some indicators to our chart. Let's click on something like Bollinger Bands, then just save. I don't have to do more. We add another one like what? Let's add the moving average, then save. Now let's go back to our chart and see. I'm very much sure you have seen these kinds of charts, and mostly the people who post things online about trading, majority of them you will see them having these kinds of charts. These charts are very dirty. Actually, myself, I don't like indicators at all, but I've just done this for demonstration, so that maybe one day you can wake up and find your charts looking like this. How can you remove these things from your charts? And if maybe you understand how to use them and you want to use them, how can you add them to your charts? So they are already now in your charts. How to remove them? You just go back to that, which is now the dollar sign. You click on delete, then you mark, and then you click on what? The delete. You can see we are back to our clean charts. I like the charts while they are clean this way. The other one there, you can see we have H1. H1 means it's 1 hour. So we have from M1. M1 means 1 minute. M5, 5 minutes, 15, 30, 1 hour, 4 hours, day, week, and then MN is month. MN is month. Right? Now, right after that, we have this one. So this one is just you can use it to place some orders with it, but I don't normally use it. I use the normal one. Just go to the pair, then click on the new order and place it. The other one, if you click on it, you can see now you can be able to place orders just directly from your charts. But I discourage this because sometimes you might be doing maybe analysis in your phone and you end up clicking on either buy or a sell, which you did not intend to. So if you want to hide it now, you just click on it and it's going to disappear, right? You just click on it and it will disappear. Okay, like for the just what is showing you on the screen currently, you can see the market is at 1.12351. And below there you can see is where we have that line for buy limits. As I've just explained to you, if we are placing a buy limit, we are going to place it below the current market. Now, when you just tap on your screen, this thing is going to pop. And majority of what is here, I've already explained it. Like from where we have M1, I've saying that is the time frame, 1 minute. What does that mean? Each and every time frame you see, if it's 1 minute, that means the candlestick there is going to take 1 minute for it to completely form. If it's 5, it's going to take 5. If it's 15, it's going to take 15 minutes for it to form. If it's 1 hour, it's going to take 1 hour. And candlesticks represents price in the graph. So that means if it's 1 hour, this is now the price changes in a period of 1 hour. So each and every candlestick you see here represents an hour. If it's on the day, that is D1, that means it's a complete 24 hours. If it's on the W1, that is weekly, it's a whole week. Monthly, a whole month. Right? I hope you have understood that on the time frames. Now, again, once you tap on the screen, let's say You can see we have that that thing which resembles the dollar sign. I've told you that is about indicators. I've shown you how to do that, so I'll not do it again. After that, we have the crosshair, the one for reading prices. You can see it there. I've shown you, and also how to remove it. The other one is now the one with these candlesticks signs. So this, just leave this one as it is. Just leave the settings as they are. When you click on the line type, you will see the types of charts. We have this. If I click on that, I have clicked on the bars. You can see the kind of candlesticks I have right now. I come back and click again there. I click on line chart. You will see now my chart has changed to a line graph. But mostly what we use is the candlesticks graph, and this is the one which is better. At least you can see everything clearly as well, right? So after that, you can see the next one, after just right after the one with settings, this one. This is now where you have the tools, which if you are doing your analysis with your phone, these are the tools you can use to do analysis. Don't say that I don't know, I'm not going to be trading because I don't have a laptop or what. You can start with your phone. We started with mobile phones, and I was even teaching using a mobile phone before. So you just use what is available first. Then the other one, which is the last one, which is now near the 1 minute time frame. Once you click on that, you can have in one screen, you can have like two pairs showing on one screen, and also you can see for the pairs they are on different time frames. The first one is on 1 hour time frame, the second one is on M5, and you can operate each separately, right? You can operate each independently. So if you have those two types, two charts, then you want to remove, you just click on that, and then come click and mark the one you want to remove. Then you click on the bottom there, you click on remove. You're going now to remain with your now one chart. So I've done most of that. So what I'm going to conclude with is now the pending orders, how to place them. I'm going to if you are placing pending orders, you come now click on market execution. Then let's take an example, like right now gold is going up, so we need to do what? If the market is buying, so what we can use is now a buy stop. The current price is at 32.34. So if I'm placing a buy stop, I can place a buy stop at 32.35. You can see it has accepted. So I click on place, and the order is placed, awaiting now the market to come to that point. So let me just show you how it looks in the charts. Let me clear that. I can go to a lower time frame for you to see. So you can see now where we have our buy stop awaiting. This line there, that is now where we have our buy stop. So once the market taps that point, the order will now be activated, and it will start reading either profits or losses, like the ones we have which are now active here. We say these are active orders. The other one is just waiting for the market to activate it. So the market, when the market is buying, we place what? A buy stop. When the market is selling, we place a sell stop. Now the other one is that let's say come to chart, then come to something like 1 hour. I see the market on gold will do what? Let's say I've seen that the gold prices will drop to this that 195 and then buy. So what I'll do now, at that 195 I'll place my buy limit. I'll go to new order, then market execution, and then click on buy limit. Then on the price I edit everything and now enter 31.95, then click on place. the order is now going to await the market to come to that point. If the market does not come to that point, remember we have said the order remains ineffective until the market either you cancel it, you adjust, or it's liquidated. So maybe I can come and if I want to change it, I just swipe left, then click on the tool at the center, and I can edit now. It was from 95, I can end it at something like 94, and then click modify. I have now modified the order. You can delete it as well if you want to delete it. So yeah, so now that was a buy limit order. Let's say for the sell limit order, we have seen the market is going to sell limit. We have seen the market is currently on a buy. So let's say we have seen the market will buy to 37, and then from there the market will start selling. So we have now placed the order, is waiting for the market to come and activate. So when you come to the 5 minutes, I think it's where you can clearly see. From this. So this is now where we have the 32.37. So if the market goes up to that point and it taps or touches that order, the order will now be activated, and when the market comes down, we are going to be now in profits. For the order we had placed for the buy stop, it's activated now. The market has touched the price. That's why you can see now the order has started doing what? The order has started showing some numbers here. Currently the order is at negative $0.24. So with that being said, I believe I've done everything. You can see it's now making some links there. If you have placed a pending order and maybe you don't want it, you can just come click on you swipe left, then click on the first icon, and then you click on delete. Once you delete, the order is gone. Now like this one, we had entered a sell, but the order is in losses. I can click on the that icon which is in between there and come and place a stop loss. Let's say at 32, 37. That is now the stop loss. Then I click on modify. So let's just come to the charts so that I can show you something. For the order I had placed on a sell, you can see the market is buying and is not selling. So that means I'm in losses. As you can see, I'm in losses of $2.05. Now, if the market is to go up to where I have placed my stop loss, this point, the trade is going to close with a loss of $3.35. Remember, I have $200 in my account, so the 200 minus $3, I'll still remain with $127. So that is now the use of a stop loss. Yeah, for the take profit, I explained that as well. So guys, I believe we can end our session there for today. We have done a lot. I wish you all a good night. See you next time. Don't forget to comment there, like, share. Yeah, it's your mentor signing out. See you next time.